All good.
You can hear me. Don can hear me in the back, guys. For those in the room.
We are from this camera up here.
If you're from there, and then it's recording.
We are good to go. Perfect. Well, welcome everyone. We're going to go ahead and get started today. And I'm going to be looking back at my laptop, even though I should be looking up at this camera. You'll have to forgive me. We've got people in the room and we've got people online, but we're going to go ahead and get started today. Today is mainly, again, about your first deal. So we want to talk about how important it is to have the affiliates. We're trying to talk about why affiliates are even here. Sorry, up here. Why affiliates are here, what they're here to help us with, how they work with us, and getting you through the flow of a transaction. We had the idea, we want to run this as close as possible to how a real transaction would work, explaining to you why a purchase agreement is even here, bringing the fundamentals down to the exact basics for everyone. So, so yeah, first off, if everybody can have their notebooks out and ready to write down with. Hopefully today you're going to be having some ahas. When you have those ahas, write them down because we may be sharing that at the end of the session. And I bet you some of the ahas that you had, someone else did not have, and it can be really helpful to do so. So yeah, we'll start there. Who knows why it's important to have strong affiliates? And by affiliates, we're talking title companies, home warranty companies, lenders. Why is it important to have that relationship with affiliates? We can hear you online as well too. If anybody wants to unmute and chime in, you're more than welcome to.
Consistency.
Consistency, I believe, is what I heard, and yes, that's definitely one. Reliability is another. We want to be able to know these individuals. It's really helpful. If you ever work with a title company you don't know anybody at, it may be a little bit difficult to understand who is doing what. Don?
How about like, know, and trust?
Like, know, and trust. Absolutely. It's also a good way to build referral networks as well through our affiliates. You know, you work with an attorney often enough. We don't have an attorney with us today. They're probably going to be referring you business as well. Something we do in coaching all the time is reach out to our network of affiliates, and Sean gets 400 calls from agents. Of who does he know looking to buy, sell, or invest in real estate? So don't hesitate to be going that direction as well. But yeah, we need to know who is doing what. When we get a pre-approval, for instance, from Cross Country, we're going to know that that's going to be a great pre-approval. That goes a long way within the industry. If you get one from ABC Mortgage out of Florida that nobody's ever heard of, that's not as confident of an offer that we typically are going to be seeing. So I wanted to give a quick market update as well. Just some recent real examples. I'm not going to throw out any statistics, but what's actually happening from what I'm hearing from my coaching clients and what I'm hearing myself as well. Is the market a buyer or seller market currently? Seller market. Would we have predicted that actually 6 months or a year ago? If we knew interest rates were going to rise, by the way, 2% almost? What would we have said 6 months or a year ago if we were to raise interest rates by 2%? It would be probably more leaning towards a buyer market. I can tell you from my personal experience and what I'm hearing from coaching clients, the exact opposite is happening. Interest rates are going up and purchase prices are going up even faster. It's a very odd thing. I just had a house that I listed. I can't share what it sold for, but I would say 2 years ago, I would have told this seller about $150,000 for their house. It sold for well above double that. So it is incredible that we're still seeing this going on. And the house wasn't in immaculate condition or anything. Like there was actually stuff fell out of a dumpster in the driveway and we still had multiple offers on it. So grab one more person here. So yeah, let's walk through the flow of a deal, and then we're going to be passing it along to just make sure of my notes here. Yeah, so we're going to be passing it along as if we were starting with a buyer. So I start with a buyer. What is the first thing that I'm going to be doing with that buyer? Buyer presentation. That would be a good one. And with that, that's a great answer. We're going to hold that for the second part of this. Something else during that buyer presentation we'd be talking about. Pre-qualify and pre-approve. Sean, do you consider a difference between pre-qualification and pre-approved? I know there's a legitimate difference, but
Yes, absolutely. You can expand on that.
yeah, why don't you come on up, and that's my segue over to Sean from Cross Country Mortgage. And Don, I don't know if you're coming up as well.
Here's some moral support for the guy.
I don't blame you.
He's new.
Make sure he stays out of the way.
No one else brought their bodyguard? Or?
15,
15, okay.
but we'll be going over some other processes.
Okay, cool, everybody. Okay, so pre-qualification, pre-approval, I think we might jump in a point in just a second, but just Don Jarecki is in the back over here, kind of camps out at the West Side Rocky River office. I'm on the other side of the wall over here, Sean Hadley. So we've got our flyer with our contact and our cell phones. It's the best and way to call. If you remember nothing else from today, just know we're a phone call away, whether it's a transaction we're working on together, or I got 2 calls in the last hour with problems agents were having on deals I have nothing to do with. Those are my favorite because it's not my problem, but I'm potentially offering solutions. But really anything related to finance, we're happy to assist with. So where we oftentimes are going to roll in is, you might go to an open house or have a referral. The first thing you're going to want to do before put them in your car and start showing houses is to suggest, hey, talk to a loan officer, let's get pre-qualified, pre-approved. So my little definition of the two, pre-qualification is oftentimes a 10-minute conversation where we're just getting a little bit of background about the buyer. Where do you work? What's your income? Let's look at your credit. And as I always term it, a pre-qualification is what we think we can do based on what you're telling me to the buyer. So there's plenty that can get lost in that sort of translation. I mean, buyers don't always know how their credit really is. They don't always know what their spouse's income is. You'd be surprised. They're underestimating or overestimating how much money they have in their account. So, but a pre-qualification is kind of just a quick and easy way to say, okay, based on what you're telling me, I think you can qualify for a house up to $200,000. You'll need this much down. Here are the different programs we're going to get into. Here's monthly payments, down payments. So it's kind of like a screening almost, and kind of a good to meet you type of situation. The close to that conversation often is, hey, I'm going to go ahead and give your realtor a call without sharing any personal information, kind of let them know what your qualifications are. The next step from here is to get pre-approved. And that's where we take that first conversation a big step forward. We're going to ask for pay stubs and W-2s, bank statements. In some cases, we could do our own verification for these and streamline it, but these are all the documents we're going to validate, verify this information. And then we run it through an automated underwriting system with Fannie Mae, Freddie Mac, FHA, VA, depending on who the loan or what the loan product is. And with this, we're able to issue a credit approval, which is our traditional standard pre-approval letter. And with that, as I talk to a buyer, the advantage of having a pre-approval, in essence, it's your ticket to buy. You're probably not going to get a realtor's car and probably not going to be able to make an offer these days, and maybe not even look at a house without having a pre-approval. So it tells you, the buyer, hey, this is your good. This is your key to opening up the doors for showings. And when you put in that offer, the seller and the listing agent, they're going to read it, which in the old days, maybe not so much. And these days, they say who's pre-approved, when the credit was pulled, when everything expires. They're going to look and see when, whose name is on it. Is it an in-town lender? Is it not a town lender? And that's going to play. So kind of it's the, as I keep saying, the gateway, gives the buyer the vote of confidence, tells the agent we're good to start looking, tells the seller and the listing agent, okay, we can open the door to these guys. And then once the offer and the negotiations start, a lot of times that loan officer is going to get a phone call. I don't get as many phone calls because Don and I offer to call the listing agent. You're putting in an offer. I put in 3 calls Sunday afternoon, and one of them was totally shocked to hear from me, very impressed, and said, my lender doesn't do this for me. And course, I said, oh, I don't think you should change your lender. Oh, no. But nonetheless, that went a long way. That deal did get accepted. I don't know for a fact that my call helped or not, but it certainly didn't hurt. But that's a big part of it. Flipping it around when you're listing a house, when you get a pre-approval letter, do all those same things, read it. You'd be surprised with how bland and generic these are, because these are all written by lenders and attorneys, and some of these things are edited as well. And if I'm listing a house, especially in this market, I'm going to call the loan officer before I make any final decisions, and for lack of a better term, interview them on how long you've been in the business. Okay, do you close an FHA? Would you do a lot of VA loans? Whatever. How long is it going to take to close? So I know in our little time here, we're going to talk about like the closing process. Do you want me to get into that or do it?
Well, I've got a couple of questions as well for you.
please.
Yeah, absolutely. So one thing during this process that I want to make sure my buyer is aware of when I'm walking through the house as a realtor is I want to ask
It's up to you.
talk with their loan officer. I'm asking the buyer to ask their loan officer because I'm not the one calculating the payment. I can come up with a rough estimate. We do that in coaching all the time, how to come up with a rough estimate. Yet I always say you need to talk to your loan officer about 3 items. The first item is going to be how much their closing costs are. Because right now, yes, I'm sure my buyer's parents had their closing costs paid by the seller. That rarely happens in today's market. The second item I want them to be clear with is how much out of pocket are they going to have? So that's their down payment plus their closing costs. And then lastly, how much their monthly payment is, because I really don't care as a consumer or their agent what their rate is. I want to know how much their total out of pocket is going to be, because there's a difference between what a rate is going to be sometimes and actually what their monthly payment will be. So Sean, when do you go over those items and how does that work when you're having that discussion with the buyer?
For me, it's in the pre-qualifications in the first 5 minutes. And I don't just, the conversation and start, it's, how's your credit? Do you have money? What can you afford? We more get all the information. And then my feedback is, okay, and let's use an example of, okay, you qualify for a $200,000 house. You're going to need at least 3% down or 5% down, depending on loan program, loan type they're going with. So before that conversation ends, and usually in the middle, we're talking about down payment, monthly payment, closing costs. Those 3 things were always hit. And oftentimes the situation, this is a good situation. We say, hey, you qualify for a $200,000 loan. We run through a simulated payment of a house in Mayfield Heights where you're shopping. It's going to be $1,500 a month. They say, okay, that's great, but I need to keep my payment under $1,100. So we scale it back and say, okay, well, let's switch it to a $160,000 house with X amount down. Let's put in taxes of this. And I give them a full itemization of taxes, insurance, and everything else that's involved. That is all part of that conversation. So oftentimes it's like, hey, Mike, your buyer we just spoke with, good news, we're going to be qualified up around 200. I'm going to get pay stubs and W-2s before I can issue a certificate. Based on their comfort zone, sounds like we kind of look in the 140 to 160 range. Also, the conversation we're having, are you looking at condos because you have HOA fees? Are you looking at duplexes because the down payments are different? Or of course, you might have rental income on the house that they're buying. We're able to factor in, and this moves the needle quite a bit on what we're able to do in terms of qualifying.
So don't feel that as the agent, you have to be the expert in all of these different categories we're hearing from today. Rely on our affiliates and ask Sean, hey, have a discussion with them about their closing costs, because they're not completely understanding why we can't have those in, and make sure that they're aware of how much that is specifically. When they're at the house though, Sean, what physical items should they be paying attention to, or any red flags that would possibly not allow them to get a loan in the house?
So with almost every loan, because there's a whole segue here into appraisal waivers, but typically speaking, just assume we're going to have to do an appraisal of a home. The appraiser is kind of our on-site. They don't work for cross country. They're in essence hired by cross country to do an appraisal. The appraiser is there to make sure the house, obviously to determine size and shape and eventually value, but also condition. So if there's any health, safety issues, asbestos, mold, things like that, we're not necessarily going to say we can't do this loan. We're going to say this has to be investigated for what kind of mold is this, or we have water seepage in the basement or a hole in the roof. Not to say we can't do a loan, but these are red flags that come up that may require another inspection or certification or such. So, you know, and this is oftentimes as you are in more, for those of you who are brand new, as you're in more homes, you're going to get a pretty good understanding of, you know, what I consider livable, you know, especially, you know, shortly after college and lifestyle compared to what my wife considers livable, two different, you know, pages. So beauty is in the eye of the beholder, and health and safety issues, guys, could be in the eye of the beholder as well. So, and you know, that's where you as the realtor kind of be like the pillar right in the beginning to maybe kind of set some guidance. And I have a call from someone the other day, says there's no bathroom in this house. It's halfway through a gut. The kitchen's fine. It looks great, but there's no toilet in the house. So technically the house isn't livable. You know, there's some minimum standards that can be done to make that habitable without it being, you know, pristine. But so there's always a little bit of flex there.
Perfect. Do you discuss appraisal gaps at this point with a client?
Yes, appraisal gaps. I'll give you kind of a quick example in case you're not aware. So let's say there's a house listed on the market for 180, and the house is driven, you know, through negotiations is now driven up to $200,000. And the buyer say, I'm going to put 20% down. Good, great. This is a great example. $200,000 house, 160 loan, and they're buying it off a list price. So now all of a sudden we're a little worried about what if the house appraises short. And the buyer, to maybe make their offer more attractive, says appraisal gap. Doesn't matter if the house appraised for 200, 180, 150. I'm going to come up with the money and make it work. So it gives the seller some confidence, saying, hey, some of my house so high, I don't want to have an appraisal issue kind of just totally, you know, trash this deal and we have to start all over again. So by doing that, the buyer's sort of committing, it's almost pre-negotiating, say, hey, if it comes in short, I'll be okay. So let's say that the house comes in at 190,000. Now we've got an appraisal shortage, a gap there of $10,000. What happens? And this is a conversation we have with buyers before the offer is being made. So there's often heavy dialogue there. So for this particular buyer, if it comes in at 190 and they're borrowing 160, it's not a huge deal. We can offer the same loan, typically the same interest rate with no difference, except now they're technically borrowing more than 80% of the value. Now we have to have PMI. Everybody hits the panic button. So I said, before we spiral down, let's run through the numbers. This almost exact scenario happened not too long ago. The PMI was $14. So Mr. Buyer, you pay $14, or you can come up with $10,000, or you could just walk away and, you know, go find another house in this market where you're probably going to have this problem again. So your question, yes, I do have a conversation with appraisal gaps. So sure.
Yeah, absolutely. that actually exact scenario happened with Andy. That might have been the one you were talking about. With his personal house, and he ended up the appraisal came in something like $75,000 short. It was something ridiculous.
Yeah, I forgot about that. Yeah.
But because of how much money they were making, we did the math, and again, it was something, I don't even think it was that. It was like $12 a month difference. But when he heard the appraisal came in very low, we should be prepping our buyers at this time. This could be an issue. We should be aware of this. Yet you are selling your house, hopefully. If they're not, just make sure that the expectations are met, that they're not hitting that panic button because they're saving this 20% down. They're saying PMI is horrible, horrible, horrible. It's $14 a month over, in certain scenarios, not all scenarios, over 3 years. You do that math and go, look, it's only a couple $100 at the end of the day, and then you can get it taken off after a couple of years if it's not FHA. If it's FHA, it stays on for the life of the loan.
And two other comments I would make. You know, Don and I specifically in our little team here, we've got Chris, Carmen, a handful of others on our team here. We're big into communication, obviously, but my message to a buyer, say, here's your pre-approval letter. This isn't one of those, call me after you buy a house. It's sort of, you know, this is the beginning of our journey. So when you see a house, call me, we can run numbers. The second part of that, if you're the buying agent or listing agent, it doesn't matter if it's a short appraisal. If you've got bad news coming, your buyer, sorry, your client is going to reflect your, you know, when I call a realtor and say, hey, you know, the appraisal came in $5,000 short, they're up in arms, they start screaming. I was like, well, I know how this is going to turn out because they're going to have that same attitude when we talk to this thing.
Yeah, I mean, one thing I just want to really endorse with the affiliate partner thing is that there are so many different scenarios, and especially as a new agent, so many different scenarios that you can encounter, whether it be an appraisal shortfall, some livability issue, or something that comes along the way. And right now, it is impossible for you to know everything to be able to navigate that transaction with all the different decision tree options that exist. So partnering with strong affiliates and having a person, right, will build confidence with your client and also allow you to be more confident that no matter what comes, like I promise you, after collective 30 years or more in the mortgage business, like Sean and Don have seen it, right? And same thing with Tiffany and title, and we'll hear about Gina home warranty, but you're able to pull on all of that, and so getting them involved in the conversation sooner will allow you to lean on them more, and you'll learn, and then the next time you will have an answer. So this is how we learn and grow as realtors.
I think we're 50 plus years. I'm 33 and you're
22.
Just brag.
You're only 33 years old.
55.
I'm sure my kids.
Yes, well, no, I mean, over 50 years. I mean, there's a portrait of Sean aging in some English drawing room, right? Like Dorian Gray. We still haven't figured that one out, but yeah, I mean, but think about that, like the number of deals that you guys have seen and the workarounds, the responses, and the solves, and just your inclination to look at things to make sure that they're, if there's a will, there's a way with cross country. That's been my experience. And you guys get, like, as realtors, you get imbued with that.
Yeah.
So yeah, like Sean or Don will make the deal work, but because you brought them to the table, you as their realtor got it done.
You're a shining star. Yeah. The other part of that I've learned working with Sean and Don is, like, when I've called other banks, they'll just go, "Yep, your buyer's good, all set." And I'm like, it seems a little bit too easy. What's going on? And typically that problem comes up. What's nice speaking with both of them is they will tell you, "Hey, yes, we can probably get this done. Here are some unknown factors in the future you need to be aware of. Let's see if we can structure this correctly." Just like Mike said, there's lots of ways it can go. Wendy, you had a question?
Yeah, are you able to lend outside of Ohio or the?
Yes.
So if we have a client here looking for property in Florida, I know that I can't sell it, but you can
Yep.
fulfill the lending, okay.
So the way, so I'm licensed specifically in Ohio and Florida. The other 48 states I still can assist with. We partner with loan ups from a corporate office, and we get to work the file in tandem. So pretty much any state, Florida and Ohio are
Okay.
easier.
It's someone you already have
Mhm.
in the book, so.
Yeah, Florida and Ohio, it's for me, whether I'm doing a loan in Miami or Pepper Pike. both of it.
Okay, thank you.
Yeah, and I mean, as a testimonial, you as the real estate agent, referrals are awesome, but also, I mean, I gave Sean a lead for a property in West Virginia. And even though he referred the file out through corporate, you work that as you would any other, right? I mean, there's no loss of attention to detail.
One of the most beautiful homes too, with one of the craziest stories next to it. We'll save that. for next time.
Eric, can I add something real quick? Since we're on
Yeah.
the topic of pre-approvals, without sounding so invasive to a potential client, you first meet and saying, "Are you pre-approved?" Maybe you want to ask them, "Are we be purchasing with cash or in need of financing?"
Yeah.
That doesn't sound as invasive.
Yeah.
So then if they say need of financing, great. Let me introduce you to my partner we work with.
Yeah.
Good script.
Yeah, love that.
Well, sorry, and I'll even go a step further, because I know, Sean, you and I talked about this, is the influx of individuals that are interested, that are doing purchase mortgages now that we're doing refis. Like, if you start in that path, you can always steer somebody, even if they are pre-approved, into cross country to get a stronger pre-approval.
Second opinion.
Yep.
Something I want to make sure everybody's aware of in today's session, I'm going to be giving you some action items. If you coach with me, you know I'm all about doing things outside of the room, not just inside of the room. So our right now we are at day 0, we're going to call it. We're going to go through this and like what the flow is. So we're at day 0, we're showing the house. What I do at this point, and you don't have to take this action item, but I want you to give this when this moment comes. Leaders don't wait for others to take action. While you are showing a buyer, you are their leader. So you need to actually text Sean and say, "Hey, Sean, I'm with my buyer. Can you have a discussion with him tomorrow at 3, or does 4 o'clock work better?" And the buyer's sitting there with you as well. when the buyer needs lead like that, you have to take that type of approach, not just say, here's his number, give him a call. Take the forward approach. Now, like Don said, we don't want to be too pushy, but if you have the relationship with that buyer and they're just not setting up time, indecision is the thief of opportunity. Just say, hey, Sean's able to talk to you tomorrow at 2 or 4 if Sean is. But I will always be looking for the opportunity to set up, if it's a carpet company, if it's a roofer, if it's a cider, I'm not just saying, here's the number, give them a call. I'm trying to put those two together. So that's your action item. So that's what it would actually go. That's like your action item at this moment. Go get pre-approved. And then that's our first start of our journey. So we're gonna move on to day 1. And Sean will be back up here momentarily to talk a little bit more about the process of flow.
Cool.
Perfect. All right, so it's back on to me as the agent. What's my next step? I'm gonna make this pretty quick because I wanna make sure we have time for everyone today. Our next step, we're gonna call this day 1. The next day, and even possibly still the same day, we're gonna be writing an offer. So you can put day 0 to day 1 now is going to be writing the offer. Now, in a normal market, is it normally moving that quickly? The answer is no. Normally it's the mom and dad have to come over and check it out, and they want to check the roofer and have all these other things going on. In today's market, we typically don't have that time. So we have to be very aggressive. So the way we write offers is really important. I'll give you a couple of tips here on how to make a strong offer. The first thing I'm going to have you do, action item, you can start these action items. Watch on our KWGM YouTube page. We have how to win in multiples. It was a great session we just had 2 weeks ago. Review it if you need to. Take notes. Don't just watch it for entertainment. Actually use it for education. Get in there and actually realize how you can make strong offers without just spending your client's money of putting in $50,000, $100,000 over asking offers. Sometimes that's needed. Sometimes it's not. Well, Sean already got into it of like, have your lender, if need be, call that agent. I would say probably out of every 10 listings, I get a call from a lender trying to push their client. And I already know, one of the questions I'm asking a lender when I receive offers is, hey, I'm calling about Sally and Jim. And if they're like, who are you calling about? I know that they probably are not very engaged with that client, or they're overwhelmed with business. So that means that they probably don't know the file very well. Now, it's okay if they go, hold on, what's the last name? Let me pull it up. Oh, and they start to rack their brain around it. But if they're just giving you, like I said before, oh yeah, I wrote a pre-approval, they're good. That's not what we want to hear. Have you looked over their tax returns yet? You can be asking them. You can go a little bit deeper, and that's why we want a lender that's going to be giving a strong pre-approval ahead of time. One other pushback, a little bit of a side note you might hear from your clients is, Eric, you know me, we've been friends for a million years. I won the lottery years ago. I have a ton of money and I can afford whatever I want. I know that as your friend. Who does not know that? The lender, and mainly, most importantly, the seller, right? So the point is, Mr. Buyer, you're going to be putting your offer up against 5 or 6 other offers potentially, and it's probably going to be Saturday night. And I don't want to call Sean again Saturday at 8 o'clock to get a pre-approval. We want to get that done now, and you want to be prepared, right, Mr. Buyer? Yes, let's go ahead and get that moving forward. Is tomorrow at 2 or Friday at 4 work better? Again, that's a little bit further back into what we're discussing at that point of even making the offer. When we're writing the offer, we want potentially higher earnest money they'll talk about in the winning in multiples. You can talk about closing dates from the listing agent. So I'm calling the listing agent at this moment. Another action item, Mr. Lister, I know you're getting a ton of phone calls. I want to make my client on top of your pile. I'm going to send you what I call the winning offer. I'll even text them sometimes because they typically won't answer because they're getting so many. I want to discuss the winning offer on 123 Main Street. That's going to make you stick out. They're like, who is this Eric guy saying he's going to have the winning offer? You jokingly have that conversation with them. I did literally win an offer, and that agent recently just texted back. He's like, I knew you had the winning offer. He was laughing about it and joking with me. And it's very true that if we build that relationship, when there's 20 offers on the table, that agent's only going to remember the top 2 or 3 people. and you want to be able to stick out like that. So cater the offer to the seller. That could be with closing dates. When do they want to close? You can do a post-close possession, meaning you close on the property, then you take possession a couple of weeks later. We already talked about high earnest money. You can narrow your days for home inspections. I call the home inspector at this moment. So another action item. Call the home inspector and ask, when is their earliest availability to see the home? Because if you have one person saying, I'll take 10 days to go do a home inspection, and then my buyer is going, I can do it tomorrow if you accept our offer tonight. That makes your offer look really nice to that seller. Worst case scenario, we'll give you an ROC the next day. We will sign a removal of contingency. It might have 5 items on it, but we're going to give you an answer within 24 hours. Only if the home inspector is available. Do not use that unless we know that the home inspector is available. Otherwise, you're going to be calling every home inspector in the state, seeing who can get there. You might need 3 days or 5 days, but see when that home inspector is available. Beyond that, we sit down with the buyer, we set expectations. Another action item, review the entire purchase agreement with the buyer. The magical thing about Dotloop is every buyer will sign whatever you send to them because they just click buttons. Do not do that. This is the most important contract that they're going to be signing in this transaction. And if you make a mistake or there is a misunderstood statement in there, for instance, there's a home warranty sign on the sign, but you don't check off home warranty. Is there a home warranty on the house if you check off no on the contract, but there's a sign in the yard saying there is? There is no home warranty unless you want to buy one for them. So whatever the contract states, you have to remember, and you might be having different conversations. Remember, did Sean talk to them about, and Don talked to them about closing cost assistance? Are we asking for closing costs? Hopefully not in this market, but there's going to be a time where that's going to become the norm again. And if they talked with the lender 3 weeks ago or a month ago, and now we're making the offer, they may have forgotten. You have to be going line by line through this and going, yes, we did talk about that closing cost assistance, and we should be writing that in. So common errors that are missed, what appliances are coming in the home, what closing costs are, who is taking care of point of sale, and something that's a little bit further down the, well, I'm going to hold that actually for that one. I would say those are the top 3, like, that's a big problem issue. So again, we've got point of sale, closing costs, and when I say appliances, it's not just appliances, it's everything coming in that's coming with the house or that should be removed from the house. When you do talk to the agent, make sure that you're having a good, friendly conversation with them. You want to win them over by knowing, I just won another offer actually over the weekend by having a good relationship. There was another higher offer and I said, what would it take? You know, I'll get the deal closed. And she goes, Eric, you know this city like the back of your hand. I know you'll get it closed. If you can come up $1,500, it's yours. And that was a value to her client because she knew my buyer would close on the transaction. She knew how we worked. So you want to build that reputation with that seller. Okay, we are going to move on to title. So we are now under contract. We are day, call it 2. We negotiated over 24 hours. Now we are going to get title involved. So let's see, get my sound back up here. And who is here from title?
Here, present.
Oh, come on up.
Feel like I'm at school. Hello, everybody. I don't have 33 years like Don. I only have 18. So I'm a little far behind.
Very good.
But
Very
I'm
good.
much
Very
younger.
far behind.
Yeah.
18 years only. So I have a couple of questions, but if you could walk through the first thing that we're going to do is open an order with title.
Sure.
So tell us how that works.
If I could take it a step back even,
Sure.
if you don't mind.
Please.
So oftentimes, especially in a seller's market, the listing agent's probably going to be really, I'm going with my title company, right? Because that's who they know, like, and trust. But ultimately, your buyer's the one who gets stuck with the title insurance that title company issues.
Mhm.
And so it's not always in their best interest to go with the seller's title company. So there's a couple of different ways to think about that. Oftentimes though, especially in this market, you're gonna have to go with who the seller wants. Hopefully it's GM, but it's not always us. When you guys open an order with us, we have, I'll make sure that all of you get kind of our contact sheets, but we have an orders inbox, you send it over, we open files within a certain period of time, always same day, same business day, if we get them before 5.
So I want to repeat that. To open an order, what do they do specifically?
You have to email us the purchase agreement,
So this is an action item. So purchase agreement.
hopefully all of the contact information for your clients.
That's email, phone number. Do you want their current address?
Yes,
Current
we'll take email and phone number,
email and
and
phone
we'll
number.
do the rest of the work as far as that goes. We'd love your escrow letter with the contract.
Yeah, escrow letters are part of our Magic 6. I would rather us call an escrow letter an invoice,
Sure.
because that's really what it is. You can say escrow letter equals invoice, but if you hear escrow letter, that's an invoice from Keller Williams, which you fill out for your commission. What else would you like?
If there's a point of sale, just let us, we know that there's a point of sale in all the cities, but just let us know it's already been completed or it hasn't been started. Those are really the main things. Purchase agreement, contact information, invoice, status of the point of sale.
Now, they need to also be paying another action item. Earnest money has to be paid.
Oh, yeah, sorry.
No, absolutely. That's why we're here. So we're going to pay the earnest money. And one thing I love about GM Title, I was just talking about this yesterday, whoever was in coaching. You can go to their online, you just go to gm-title.com and tell them to pay the earnest money right on there. They type in the address, they confirm the address, and it's in an ACH.
Mhm.
So it comes right out of their bank account.
Very convenient, very secure. We never ever suggest, please don't put an earnest money check in the mail. Because it's probably not gonna make it to us. The postal service, I mean, it's just not reliable. There might be a fee from their bank, but it's usually $2, $3, $4. It's not very much. We don't charge a fee either to accept those. We have to pay a fee, but we don't push that back onto the buyer.
Yeah, and all you have to do is send that link to them and say, pay your earnest money here. Remember, gm-title.com. And what's so nice about that compared to other title companies, I have to go rush out to collect the earnest money the next day or that same day from that buyer. I rush out, go to their bank, meet them on their lunch break. The bank is closed or having trouble. I collect the earnest money check, and then I am going to then drive it over to who knows what city, Westlake or Chardon, and I've got to go hand the check to them. Way easier just to click a button and say, here, go do this. If you have to pay the $4 or whatever it is, do that instead of using gas. So
I will say too, if there's a circumstance, especially with elderly people, they don't really want to do that. We will come to either office to pick up the earnest money checks. Our sales rep, Jade actually would normally be here, but she's on vacation. She's our relationship manager. Just, you can text her, say, hey, I've got an earnest money check at the Pepper Pike office. She'll come the same day and get it. If not, we'll have a courier come get it.
perfect. The 6 items we're going to go over, and Wendy, don't forget your question. The 6 items we need to be initiating right now: earnest money, we already talked about. Number 2 is going to be ordering title. Number 3 is we're going to talk again with Sean here momentarily, but we're going to apply for the loan. Number 4 is going to be schedule the inspections. Number 5 is going to be check on point of sale. So we call the city directly for point of sale, and number 6 is going to be going over all the documents we've signed. Make sure all your T's are crossed and your I's are dotted. Make sure the escrow letter is filled out, do your buyer and seller checklist. But those are your 6 items you need to be doing immediately at this moment. Checking with that point of sale should not be underestimated how difficult it is. 3 weeks or a month from now. So again, we're still on like day 2 right now. So very good. Tell us more like, all right, title exists. You're not the BMV, like I thought when I first got into business, where you just went there and transfer title. But what do you do?
So we really serve 2 purposes. Our main purpose is to ensure the insurability of the title of the property. Like I said in my previous comment, the buyer is going to get what's called an owner's policy at closing that ensures the house they bought is theirs free and clear, right? Other than likely the mortgage they took out from cross-country mortgage. The lender gets a loan policy, which they require of us, that the buyer pays for. We ensure the lender that their mortgage is first lien. There's no tax liens, previously unpaid mortgages, judgment liens, anything along those lines. There's no encumbrances of title. The second purpose that we serve is basically we're kind of the nucleus, if you will, of the transaction, or the eye of the storm is sometimes what I like to call it. So we ensure that everything legally was done correctly in order to go to closing, and we transfer and record the deed and the mortgage and so on. But we handle a lot of the communication because we are the middle impartial third party involved. So we ensure that we pay everybody at closing. That invoice you're going to send us, your escrow letter, we're going to make sure that that's paid appropriately at closing. Home warranties, taxes, which is so important, and so on. So we're going to make sure everybody gets paid, everything gets paid off, and that we can ensure title. And we schedule the closing, we facilitate the signings, we check in with the lenders for status, and we send updates to the buyers and their agents. Lender isn't quite clear to close, we're ready to go, we'll wait until everybody's ready, and then we'll schedule.
Absolutely. The escrow, what is escrow?
Escrow is actually, we have an escrow account essentially. That's why they call it title and escrow. So title is the title insurance portion that I discussed. Escrow is the money that comes in our escrow account and out of our escrow account, which always balances to 0, unless we are holding funds for a point of sale or a final water and sewer, which is obviously in our market unusual.
Yeah. Something that we also have the ability through that website is we can actually do seller net sheets. During coaching yesterday, we did advanced seller net sheets, and we could actually calculate down to, I always tell my clients, I'm plus or minus $500 within $500 of accuracy of where they're going to land, as long as the information they provide me is accurate. And I will tell you that is a really good resource. Now, it's a difficult tool, and I know some of you have been sending your net sheets over to me, and we will be approving them, and you'll be doing 5 more this week, or 4 more actually after yesterday. But get in the process of using that. Again, gm-title.com. Log in. Do they have to assign someone to their name still?
They do. So I would choose Jade Tishka. She's in the when you log in, you can choose her. You can choose me too. I don't care. But Jade's really going to be more helpful, and she actually does classes on this, how to do a net sheet, especially because taxes and taxations are tricky. So we'll make sure that you get her contact information, and you guys can have a one-on-one with her. She'll go over what she offers to you as a relationship manager, but more importantly, really dig in how to do a net sheet accurately.
Perfect. So again, on day 1, I've handed this purchase agreement over to title, and I've also handed it over to the lender because that was part of loan application they will need. Anything that you, actually, one other action item you should be doing right now on this day 1, day 0, contact your clients, because your clients are going to call you and say, who is this GM title calling me? I have no idea what they are. And they're asking for my social security number.
Very true. And what is a closing protection letter?
And what is a closing protection letter? We hear that all the time. So prep them that those 2 items are coming. It's okay. They are a reliable resource. Yes, you can give them that information. And closing protection coverage, please tell us what that is.
So in Ohio, it's actually a law. We're required to offer it to every buyer and seller. Pre the Great Recession, this was something a lender would always get, but the buyers and sellers weren't necessarily offered it or required. We weren't required to. So they pay additional coverage. So if the title company were to commit fraud against them, including misappropriation of funds, forging their signature, something along those lines, they would be covered. Title insurance does not cover them from fraud against the title company that the title company may have committed, believe it or not. So the script I use is I give them that explanation. It protects you from fraud against the title company. You're certainly welcome to review the letter, see what it says, decide on your own if you should like to take it or not. It really is up to you and whatever your comfort level is. And then we charge them at closing for that. If a buyer and they're getting financing, it's $15. If they're a seller, it's $50. If it's a cash buyer, it's I think $40.
Yeah, and that's that would be an instance where, you know, they're title companies, and we trust GM Title, obviously, but title companies are dealing with hundreds and millions of dollars a month.
Yeah.
If somebody in that entire atmosphere, or even they get some type of hacker getting into their system and they start pulling away funds, that's what protects your client from doing something like that. GM Title's on top of it, they balance all of their books. But you get my point, that's what they're protecting against.
One of the biggest reasons, and I'll make it quick, is during the recession, 2008 and on, a lot of title companies folded. And a lot of those title companies had a lot of money in escrow for final water and sewer bills, but more so over point of sale holds to the tune of millions of dollars, especially in Northeast Ohio, because we're the only area of Ohio that even has point of sales. So a lot of those people, I know their names, they're living in Florida, living a good life. Those people never got that money back, ever. And that was the main reason that this was enacted. It was always there, but it's the main reason why we have to offer it now.
It seems kind of silly that the title company is saying, here's an insurance policy against us.
Correct. And that's what people say all the time. Why am I paying so you don't commit fraud against me?
Yeah.
Totally valid.
Yeah.
I get it.
I hear you.
I hear you.
It's a necessary item though. So, so now GM Title is going to take all of our contracts. They're going to do a title search, make sure that the owners are the correct owners. They're going to do their own thing. We're going to hear from them probably we're going to be hearing from them constantly, but usually in 2 to 3 more weeks, we're going to be hearing again from them. So our next individual we have coming up, thank you very much.
Thank you.
We have APHW, which I believe, Mike, are you filling in still for APHW, or is Gina on? Or do you want me to jump in on it?
You can go ahead and jump in on it. I can if I have to. I'll
Sure.
shop from the cheap sheets.
All right. Wendy, you had a question.
Yeah, just about the earnest check. Are we allowed to handle it and bring it to the office for a client, or are
Sure.
we not supposed to? Okay,
When you say handle it, as long as it's not made out to you, yes.
right, just deliver it here.
Yes.
If it's an older person that doesn't use.
Yeah, absolutely.
Online
If
signing,
they don't
okay.
want to go online or they are afraid of that, yes, you can collect that check. Any check over $10,000 has to be a certified check. Any check underneath that can be personal. By the way, when you tell your clients to make the title or make the check out to the title company, I had one client write out the title company. Tell them GM Title, or whichever title company we're using. Hopefully it's GM.
If they
yeah.
put it on our website, if they do the ACH and it's more than 10,000, we're going to kick it back.
Okay.
We can't take it over $10,000 via ACH.
That's interesting. I'm glad you brought that up.
Yeah,
So
it's on
that's
our
not a wire
website too.
technically.
So when they go to our website and they click on deposit earnest, it says it big and bold.
Got it.
I've made a few exceptions, but we prefer not to do it,
Okay.
especially if it's a tight closing,
Yeah.
because it has to clear, just like it's like a personal check.
And is it a certified? No, it's not even a certified check. You have to wire it over.
You do have to
10,000.
wire. If it's over 10,000, we would prefer a wire.
Now, if you are working with another title company, hopefully you're not, but if you are, you can wire the funds almost well, you can wire the funds to every title company, even less than 10,000.
Sure.
That saves you the runaround as well of collecting earnest money checks. Have them go right to the bank. Yes, it's $15 or $20. They're buying a house. There will be some minor expenses.
Is that sometimes an easier option than you taking the check directly?
Absolutely.
If they don't want to do the ACH, I would say that would be the second option. a check should always be the last and.
I agree.
Yeah.
I agree. Very good. All right, so APHW, we have a home warranty now, and again, buyers are being bombarded by information. This is why we should be doing a buyer presentation already. So that would be like day -10. Hopefully, you're doing a buyer presentation. And during that buyer presentation, you are discussing all of these different items because a lot of people go, well, Eric, I have homeowners insurance. Why do I need title insurance? Eric, I've got homeowners insurance. Why do I need a home warranty? So homeowners insurance is going to cover you if there's a fire or some type of catastrophic problem or a plumbing leak, depending on your policy, that's what's going to be covering your homeowners insurance. A home warranty is different. If your furnace goes out, your home insurance company is not going to just say, oh, we'll send somebody out and get your furnace fixed. That is on you to repair. So there are different policies that the home warranty company has. They're anywhere between $425 and they can go up to, I think, $1,200 depending on the options of the house, if it's a duplex, a triplex, all of that. There's a whole sheet on our in DocuSign or .loop, depending on which one you're using, that you can actually go into and check the boxes and offer it to them. What I love though is they actually have a sheet that says buyer coverage and seller coverage. Just because you have a home warranty does not mean that you are completely invincible. And it doesn't mean that if there's a roof leak that they're going to put a new roof on your house. They're going to patch the leak. If there is a furnace problem, they are not going to just replace your furnace. They are going to fix that problem. If the furnace was busted prior to you even buying the house, they are not going to fix that furnace. So, and the way they know that is when the contractor goes there and they go, well, geez, the heat exchanger is, filled with rust. This thing hasn't ran in 10 years, then they're going to know. If your buyers are really wise, they're going to have the home inspector go through, or if you help the home inspector go through the house, have them take photos of it running and put that in the report. Now you can document, hey, during the home inspection, this was an up and running good furnace. And then you can give that to the home warranty company if need be. The big item with using APHW, if we have a problem, we can call our rep and say, hey, Gina, we had a problem with this home warranty. Our customer thinks it's one of these gray area issues. They were turned down. Gina will fight for you. I'm not saying that she can, replace an entire roof or something like that, but she can look at the policy, see what happened, and she can make an argument for us. It makes us look like superheroes. And I've watched it happen multiple times. So that's very helpful when you are arguing. If the seller's like, hey, I'll pay for my own, or pay for your buyer. See if you can get them over to APHW. One other thing, the action item is you're going to fill out the two different pieces. You're going to fill out the home warranty information packet. And number 2, the home warranty data sheet. You should be bringing that with the home inspection because they're going to be asking what type of range, refrigerator, all of those items are in the house. You're not going to document if they're working or not. You're just documenting what it is. When you hand that in, by the way, they pay you $50 for that. Easiest $50 you'll make. And you'd be shocked how many agents don't do it. Go ahead and fill it in. And that's your service that you're providing to the title company. Any questions on the home warranty? Lastly, make sure on the escrow letter action item, if there is a home warranty, make sure title company knows that there's a home warranty, because if they don't know, it's not getting paid for. Guess who doesn't have a home warranty? Even though it's on the contract. Action item number 2, make sure you register the warranty prior to close with the warranty company. Every company has their different ways. They're very simple. There's directions right on the form that you fill out. If it's APHW, that's already in DocuSign. If it's the listing agent offering it, then you have to get that documentation from them. Item number 3, really smart to do. Text your client the confirmation number of their home warranty with the contact information for a complaint. Or I should say, it's not a complaint. What's the word I'm looking for?
Claim.
Claim, thank you. When they do that, that way you can re-reference that text and say, keep this number in your phone, because in the next year, if you have a problem, you can just call in at any time, make the complaint, or I'm sorry, help me out here again. Claim, thank you. I keep thinking of board revision stuff, but there's just got done with that season. Anyways, we file the claim, And that way they're not texting you on Christmas Eve going, oh my gosh, my furnace is down, what do I do? You say, you already got the number, you can go back to your text with them and say, take a screenshot and send it back to them if they need. All right, I believe we are back to cross country. So we are under contract, we're now day, what do you want to say? We're gonna get the appraisal involved. Let's say we're day 7 into the deal now. Now, remember, day 1, Sean already had the application in. That is different from a pre-approval. We've sent the purchase agreement to Sean. The buyer has paid their $500 approximately for their appraisal and or application fee. And it's off to the races. Now, Sean is in contact with the client and Sean is receiving, what are you receiving, Sean?
So we're, contract comes in, by the way, first thing I do when I look at the contract, name, who's buying the house, closing date and title company, and that little box for GM is checked. It's a big relief, just that can be said. Application, call the buyer over the phone. We do application, they can come in the office, but typically it's just completed over the phone. Within 3 business days, documents are out to the buyer. Usually within a business day or 2, we have them in front of them. Documents are signed. We then collect payment for the appraisal and order the appraisal. File is sent to our processing department. I have a 1-hour class on that, but I'll spare you this today. File goes to our processing department. Processing orders the title work, the survey, the appraisal if it hasn't already been ordered. Some cases IRS verifications, all sort of behind the scenes work. Is being done, and the file gets submitted to our underwriting department. So you've got loan officer assistant, then it goes to processing, then it goes to underwriting. Underwritings are the human beings at the office. They always get blamed for not approving loans. Well, they probably approve 99.5%, but they're actually very good people. They'll come back and say, hey, good news, this loan is approved, subject to these conditions. Conditions might be the appraisal if it's not already back. The buyer getting their homeowner's insurance, clear title, and whatever's on that list, we're going to send notification to the customer and say, hey, good news, your loan's been approved. These are the conditions that we need from you. These are the conditions that we're working on. We'll update you, the realtor, as well. So from your side of the desk, you'll know, you'll provide the contract. We'll let you know application's been made, appraisal's been ordered, a loan is through underwriting. Once all those conditions are taken care of, the file goes back to underwriting for what we call the clear to close. So if you see the abbreviation CTC, those are 3 very happy letters, clear to close. Meaning conditions all been cleared. Now sort of the ball is being passed back to the title company to say, hey, we're good to go, we're all ready. Now that process from the time you apply to the time you close, just to throw out some statistics, the national average from application to closing, not cross country, this is the national average, is about 53 days. Northeastern Ohio, it's probably in the high 40s. Cross country mortgage, I don't remember the units, we did $50 billion in total loans, averaged under 26 days. Our branch usually runs around 24. And keep in mind, in those statistics, that includes people who are building a house and we close for 6 months. My processors would hate that because it throws off these numbers. But we can close, we advertise 21 days for closing. That we can even speed up that time. I didn't get into a pre-approval, but we have a fully underwritten fast track loan process where we can do some of this sort of behind the scenes work up front and shave some days off of that, close in a couple of weeks in some cases. So
that's another way that you can make your offer much better. If there's a seller out there that has a vacant house and you can say, hey, I've got a fast track loan pre-approved, and Sean's calling this seller and saying, we can close this in
2 weeks. If
essentially
they
2 weeks.
Yeah.
And that is an amazing thing that you can leverage for your, because there's other banks who are saying maybe I can do 40 days on this loan, but that's a huge advantage. Now, some sellers, the other thing you could do is even if the seller is moving out of state and they are occupying the house, you can say, look, we'll close in 2 weeks, and then you can move out in 4. When you move to Florida, though, your house is sold and done. You're not going to get a call from the lender 2 days before and say, sorry, we can't do the loan for some reason, because that loan already closed well ahead of time. It's another way to create an advantage there. Now, how many documents approximately are you asking for from the average buyer? I know you don't have that statistic, but what would you say about
Just running through, there's shortcuts here I'll mention real quick, but the norm we're asking for is 2 years of W-2s, 2 months of bank statements, and 1 month of pay stubs. That's kind of the norm. Now, if you've got somebody who's self-employed, we're going to ask for tax returns, or they have investment property. If they own other property, we're going to ask for a mortgage statement. If they're divorced, or are paying, receiving child support alimony, or have a foreclosure, it kind of turns into more paperwork. With pre-approvals, most people start them online. And not that we push people that way. I mean, I do over the phone as well. But the nice part is if they do it online, depending on who their company is and who their payroll is through, we can do a third-party verification. We don't need pay stubs and W-2s. We can do account verifications with every major bank out there. So we might not need bank statements, but those are the traditional documents we'll ask for along the way. And then sometimes during the loan process, someone may be buying a house, putting $50,000 down, they've got a whopping $2,000 in their account. There's a big question. Where are you coming up with the other $48,000? Well, that might be combination of a tax refund, a loan from a 401k, often a gift from mom and dad. So there's no way for us to collect that always up front. So that's something we'll get later.
And I would write down this process is like from day 1 till 21 days. I think that's a fair estimate. From once the clear to close happens, like the ball has been passed again back to title. I think if there's anything else that you want to go over?
No, the closing, and Tiffany, I'm sure will touch on this. We've got basically 3 different types of closing. The traditional, meet face-to-face with the notary with all of the paperwork there. There's probably 30 plus documents, and some of those documents are 15 pages long. The closing, probably 40, Tiffany, you probably have a better handle, 45 minutes or so. There's a second one where we could have probably 3/4 of the documents e-signed, and then the rest of them signed face-to-face. And then there is a new system called the remote online notary. These still take a little while to be set up, but if you've got maybe a couple who's out of town and doesn't want to sign papers on vacation, this was more hurried along because of COVID, where somebody just didn't want to meet face-to-face, in real life with a perfect stranger. Interesting stories from 2020 on some of the way we close loans, but nonetheless, just so you have those different options. But that's sort of lender-driven, and then the title company kind of work together.
You may need to help Sean expedite some of these, and Sean never asks for these, but sometimes you'll hear buyers complain they keep asking for more documents. You prep them ahead of time that the 5th page of the blank bank statement you still need to submit. So submit everything, get it up front, get it done. Make sure, just touch base with your buyer every now and again and say, hey, is Sean waiting on anything else? Is there anything I can do to help expedite this? There's usually not. You can't go to their bank and get this information, but be there to try and help that process along, because it's not a big deal right now that Sean might not be waiting on it today, but if they're delaying the transaction and all of a sudden there is a deadline, that can really be a big problem for you, the seller, the buyer. When moving trucks have to be rescheduled, it is a nightmare, especially in today if we have multiple homes closing and one is contingent upon another, is contingent upon another. So yeah, that's mainly, though, as far as the realtor, we're pretty hands off. We're passing the ball to the lender and trusting they're doing their job, and cross country always has. That's why, though, when you deal with ABC Mortgage out of Florida, they might not know their processor. I assume a handful of processors that are handling your transaction. They're local. They understand who this person is. At ABC Mortgage out of Florida, you're just being thrown in a big category. Key bank, they may have never worked with this processor before, so they're just being thrown into the pile and you don't know what you're getting. So
yeah, our team just has 3 dedicated processors just to our team. And I'll give you a quick example. Had a buyer had pre-approved a month, and they said, hey Sean, I got this offer. It sounds too good to be true. It probably is, but it's too good to pass up. I'm going to go for it. I said, no problem. I'll be here in case any problems come up. And I knew this was coming. Got a phone call this morning. Hey Sean, you were right. They've never heard of a point of sale inspection. So city point of sale inspection with an $8,000 escrow hold. it's throwing a whole monkey wrench in the system. This is a 23-day close. Now they're down to probably 15 or 16. And now we're, may or may not save the day depending on what the other lender, but just an example of how things are working.
Yeah, septic. So when you're just here, like septics, point of sale, any of that stuff, like contact the local lender. I had one buyer that beat out cross country supposedly by like 1/10%, and they wanted to go with them. And I said, can they do a septic? They could not do a septic. They ended up promising them a rate that they couldn't get. And then the buyer backfired, got upset with that lender. And then 3 days before closing, yeah, we can't do a septic. We didn't realize what you meant by a septic system. And it was Huntington or some big bank. I'm not going to throw anything under the bus, but it was some bigger bank. I remember that. And we were dealing with somebody out of state. So
We have a point of sale list too,
yeah,
that if you need it, we can send to you guys.
perfect. Well, we are 9 minutes over, I believe. Is that correct, Mike? Did we?
I think we booked 2 hours for this, so you're
Okay.
51 minutes are on.
Perfect. Well, then we're gonna be at probably a little bit early. I don't know if it's gonna be 2 hours long, but we still have plenty of more items. So Tiffany, I'm gonna have you come back up. Now that Sean has given that CTC email, clear to close, we are jumping for joy. We are right there now. 3 things for, if you're on the seller side of a transaction that we're normally looking to push to get past. And this is, I just had this conversation with the listing I just sold. Number 1, yes, congratulations, we've negotiated. Actually, I'll give you a couple of different points. So big hinging points, you're gonna wanna write this down for a seller. Yes, we've negotiated. That does not mean we are done. So congratulations, we're under contract. Number 2 is we have to get past a home inspection. Number 3, we have to get through an appraisal. There's 2 parts to an appraisal. What are the 2 parts to an appraisal? Price and condition. 4th item is going to be point of sale. The reason why I bring this up on the flow of a transaction is what we don't want is to go to a seller and say, hey, Mr. Seller, we're negotiating, we're negotiating down in price. Today we're negotiating up in price. But hey, congratulations, we've sold it at 200,000. Oh, home inspection came back. Sorry, we've got to come down another 3,000. Appraisal came back. Not only do we have to come back another 3,000, they want the door repaired, and they also said that our house is worth $3,000 less. Then the point of sale comes through, and we're hitting them again. It's okay if you're doing this, if you give them all of these up front, because you don't want to celebrate when we're negotiating. You can do a little bit of a celebration, but you don't want to celebrate until we're completely closed, because they will start giving you the line that all sellers do. I feel like I'm giving them everything. That's going to be how they feel because we haven't met their expectations, right? I thought we were done when we sold it at 200. No, now we're down to 185. We are not seeing that happen in today's market as much, but we are having some of these issues that I just referred to. So make sure that you're preparing your seller when you're on the seller side, and you should make the buyer aware of those 3 challenges too. They're not getting the home if the house doesn't appraise, if they can't do the appraisal gap. So be careful if you're telling everybody in your family that you're buying a house. How are you going to feel when you tell them, sorry, I couldn't buy it because I can't afford it anymore? So I do caution them at that point. So tell us, we got the clear close from the lender. This is normally now rush time.
Hurry up and wait, yes.
Hurry up and wait. So now the ball has been passed more or less back to the title company. What's the process look like now?
So you'll see when you work with GM, we send out milestones via email to everybody throughout the transaction. There's 5 of them. One of them is prepare to close. And this basically tells them this is what this process is going to look like for you when we get the clear to close from your lender. Your spouse has to come to closing. You need to wire your funds if it's over 10,000. A lot of the things we've already discussed here today. So it really sets the signing experience up for success with them. When a lender is clear to close, cross country is wonderful because when they're clear to close, it really does mean they're clear to close. I would make sure that they're clear. If you're working with a different lender, there's such a thing as a clear to close, a conditional clear to close. We've had a couple of those lately that have been a disaster. So the clear to close doesn't mean we can, oh, great, we're going to sign at 5 o'clock today. There's a lot that goes into it from there. So what we do as a title company is we reach out to the lender and say, that's awesome, you're clear to close. Can you tell us how quickly you can get us loan instructions so we can balance the closing disclosure? The closing disclosure is what tells the buyer how much money they need to bring to closing, tells the seller how much money they're getting at closing. It's a lender prepared document, but we're responsible to do this, essentially copy that document in our system, balance with the lender, and provide everybody with a copy of that before signing.
We're gonna put this as day 21 through day 30, by the way.
So then, once we have an ETA on the closing instructions, we will reach out to the buyer and seller to schedule their signing. As Sean said, there's multiple ways we can do signings. We have local notaries here and then also notaries all over the country that can go and meet with your clients to have them physically sign in front of them. We also, Ohio is a RON, remote online notarization state. So let's say your seller has a cash buyer. We're gonna give the option to your seller to sign electronically with a notary online, which is awesome. They don't even have to get out of their pajamas.
Can they be out of the country while doing that?
Kind of.
Tell me more.
Are they an American citizen or are they just out of the country?
American citizen.
Okay, yes. So we have an online notarization company that we can work with that uses specific notaries that allows us to sign American citizens who are abroad electronically, but also non-American citizens who are abroad electronically.
That's interesting.
Yes, we found a caveat to get around them having to go to the consulate.
Yeah, usually they have to go to the embassy if they're out of the country, and I
Yes,
can't imagine the fun that would
it
be.
takes a month just to get an appointment at the consulate. So if you do have someone out of the country, please let your title company, the title company know day one. I would put that back on your action items for day one. We need to know if they're out of the country. We need to know if they're not a citizen. These are all really important things. So once we've arranged the signing, whether it be remotely or in person, we balance the closing disclosure with the lender. They say, yes, we're balanced. We say, awesome. We send it out to the buyer and seller to review. We also send it to you guys to review. And we send you your commissions to review. We give you the opportunity to review the closing statement to confirm that the invoice that you gave us matches the closing statement so that when you get the check, it is correct. We ask kindly that you look at it. We are humans. We do miss things, but also invoices and escrow letters come over and they're incorrect.
Yes.
More often than you would think.
Now, keep in mind, there's escrow letters coming from the listing side and the buyer side, and what the title company does is they go, hold on, Eric thinks he's getting $20,000, and the listing agent says he's getting $5,000. There's a problem here. And they will balance that out and say, okay, one of you two is wrong, figure out who that is, and they sort it out.
Yeah.
The other thing on your action items, you need to be going back to these notes and going, okay, well, I should be checking in maybe a week ahead of time and let our clients know that, hey, title is going to be reaching out in a week. That's when we're going to be filing. A couple other common errors we see on the realtor side of misunderstood items. Once they sign, Tiffany, do they all of a sudden have keys to the house?
We do not.
So you don't give them keys at the signing when they give you a $20,000 check?
We do not.
So remember and prepare your client. They all of a sudden go, oh my gosh, I've been waiting 30 days for this date. And they've forgotten the date that you told them you'd give them keys up front. But they're walking into this meeting and you're typically not there. If you want to go, and I would encourage on your first couple of deals to go so you understand what it is. But in Ohio, the majority of realtors don't go to closings.
In Northeast Ohio.
In Northeast Ohio.
Central and Southern Ohio, most of them go.
That's very interesting.
Because they get paid at closing.
Because
Because they give keys and commissions at closing.
That's interesting.
in
Keys
Central and
commission.
Southern Ohio.
That rolls very, very smoothly. Keys and commission, I'll have to remember that. So when we do this, we want to call the client and say, number one that I'm doing, we talked about it yesterday, we're reviewing the HUD and ALTA statements. There are, how many people do you pay from a?
On every
Alta.
transaction?
Yeah. How many people are you
Usually
cutting
about a
checks?
dozen or more.
So they're cutting 12, 15 checks. And by the way, these checks are changing on like a daily basis sometimes. Because if it gets closed later or earlier or a purchase price changes, guess what else changes? Our commission. So these numbers are getting updated. Is there a possibility for a mistake? Yes. And it might not even be the title company. It could be that the lender made a mistake, or that the point of sale or the city or the county or somewhere there's a mistake on the numbers, it's a good idea for you to check. The things that I'm typically checking for, prorations of taxes are correct. Number two, don't forget that your client paid earnest money. Make sure earnest money is on there. ROCs, the title company, removal of contingency. So this is after the home inspection. The home inspection, again, we talked about happens in the first week. After the home inspection, we are going to be asking for repairs or credits. The title company has no idea if you and the buyer signed this statement unless we send this to them and the lender. We got to make sure that they're all aware that if there's a $3,000 closing cost credit, they need to know. So if you negotiated that, it's a good idea to check that. Septic holds, make sure that those are on there. And we had one that there was actually a double escrow hold. By accident. There was two different lines. And we can check that, but guess what our buyer feels or our seller feels when they walk in there and they're like, wait a second, I thought I was getting 100,000 and I'm now getting 85. What happened, Eric? Always tell them, just hang tight. Those aren't the final numbers yet. Let me review this and see if there are any mistakes. I'm not saying that there is a mistake. I'm saying, let me check and I will get back to you. Now that's if the title company hasn't sent it to you ahead of time. Hopefully you can get it prior to filing. Now, I will tell you, sometimes we're up against the gun.
Yes.
And, you know, it could be a lender that is dragging their feet on a loan and they give everything and they go, here, title company, it's all you. You've got 3 hours to close the loan.
Correct.
Or close the deal. So sometimes our backs are up against the wall, the realtor's calling to push everybody. So try and get this ahead of time. But again, understand that we're all working together. Keep in mind as well, there's about 40 people on any given transaction that are touching this file, not just through title, but through the lender, through the city inspectors, through the home inspectors, the family members of the, you know, there's a lot of moving parts on this. We are, as the realtor, you know, handling and making sure all of this moves forward. People ask, whose job is it to send the contract to title? It is always our job. It is always my job. I don't care if I chose the title company or I didn't choose the title company. It's my job to make sure this process moves forward.
We always send, to add to that, we always send an email letting you know we've received the contract.
To both agents.
Yes.
Yeah.
Because we want you, both agents, to know, because oftentimes that is how people feel. I chose GM, so I have to send it, and the listing agent won't.
Yeah.
So we want everyone to know we've got the contract, so there's no question.
And we need to send that again on day one. We can't be waiting 3 weeks to send this to the title company. They get an earnest money check from our client, but we have no idea what this is for.
It's also built into our workflow. We do a preliminary closing statement for the seller that's sent within the first 2 weeks of opening title. So the seller has ample opportunity. Obviously, things can change. Things can get added, taken away, but for the most part, they're going to know at least what their title fees are 2 weeks into the deal. So there shouldn't be any question as to why am I paying for half the owner's policy,
Yes.
right? So.
Yeah, by the way, all the fees for title company are outlined specifically on our contract under title. So title and prorations, if they ask, what does the seller pay for? It literally says seller pays for the following, buyer pays for the following. So you can re-reference exactly what that is.
So they've signed, everything comes back to us. We have to then, it's not over. We're still running this marathon. We're almost to the end. So after everybody is signed, the paperwork, the notaries bring back the documents to us. They are stacked in a specific order because every lender has a different stacking order that they want their documents in. We have to stack them how they wish. We scan it over for them to review. Everything saved securely in our system. We ship out originals, we balance the file. There's a lot that goes into that. This is usually within a couple of hours of the actual signing. And then once a lender approves the signed documents, they will send us their funds along with their okay to fund. And if we have the buyer's funds and it is the contract closing date, we will then confirm closing. So this is a little different than a lot of the title companies in Northeast Ohio. Not than the state, but in Northeast Ohio. So there's no law in Ohio that says you have to transfer and file before you can close and disperse. There's no law. It doesn't exist. If a realtor tells you that, it's not true. We don't. wait to transfer and file before we disperse and close. We issue what's called gap coverage. That gives coverage from the time that they actually sign those documents to the time we disperse the funds and transfer and file the documents at the county level. The reason for that is mainly Cuyahoga County. Most counties now are pretty much back to normal working order. I don't think Cuyahoga ever will be again, to be perfectly honest. It takes 24 hours. They won't even let you. So it used to be you'd walk in, you'd have a huge stack of deeds and mortgages, and you go through the process. Now they make you drop everything off and wait 24 hours. So if your buyers didn't sign until 9 o'clock that morning, for instance, and we have the money, we have the lenders okay, but we couldn't physically deliver those documents to Cuyahoga because they don't offer electronic filing, which is crazy in itself. We can't physically deliver them before they're signed, and they have a 24-hour requirement. So now nobody's getting keys till the next day if you work with certain title companies in Northeast Ohio. At GM, we're perfectly happy to not require the transfer and disbursement. I think actually Andrew's working on maybe getting that changed.
Good.
In your documents, and we can go ahead and close.
Now, this can be a point of a lot of stress at this moment,
Mhm.
especially if we are not meeting the deadlines we've already talked about. We've got, again, people's moving trucks that have to be made sure that they're done right. We've got a seller who has 4,000 pounds of furniture in their attic that they can't get out anymore. We've got all sorts of these items that we're trying to, that people are up against the wall with, so higher stress levels can be coming out at this moment. Be there to solve problems, whatever it might be. If you need to help get a mover over there to help them, if you need to remind them, here are a couple of things that I'm reminding at this moment. Don't forget to forward your mail, number one. Number two, don't forget to get keys. How are you giving keys to the client? Because that's all they care about. So get ahead of them on that. Don't forget, Mr. Seller, you have a garage door opener in all of your vehicles. One of them is in Florida already. Make sure that you take that out and ship it back to us. You don't want to be reprogramming a garage door. You are also doing a final walkthrough with the buyer. During that walkthrough, bring the removal of contingency. That removal of contingency will say the seller was supposed to fix the cabinet, fix the water, fix whatever it is. Go through the house and show the buyer, hey, these are the items that were supposed to be fixed. Utility transfers, if I didn't say that already, gas, electric, water is one that just kind of, they're not doing anything until it transfers, especially in Cuyahoga County. That's a fun one. Water is one that follows parcel. So your water bill follows the parcel. Your gas and electric follows social security numbers. So if you ever wonder why we're having water holds, that's why. Now, Cleveland Water, I've noticed recently, when you buy a property, they will reset the bill to zero.
Mm-hmm.
That is a new system, and I don't know what they're doing with the previous bills. Do you know what they're doing?
Giving them to us to pay.
And if there's no money held in escrow, what happens?
The buyer gets stuck with it.
Got it.
So we order, for water,
Mhm.
we order a water and sewer status on every file that we close at the beginning. So if the water and sewer amount that's due at the time especially far and away exceeds the amount of the hold, we're going to collect for that at closing to ensure that all of the funds due that could exceed our hold amount are paid. And then it's up to the seller after we close to order the final water bill and sewer bill and send it to us to pay. Or they can pay it and we'll reimburse them. We would really just prefer to pay it. I don't really want to get a copy of their canceled check. It's a whole, just tell them to send us the bill.
Yeah.
It makes it, and we do send an email post-closing to the
Okay.
sellers, just if we're holding water and sewer, which we 99.9% always do. After we send the congratulations, you've closed and dispersed. We send an email a few days later, just reminding the seller, hey, just remember we are holding for final water and sewer. If it's in Cuyahoga, we give a whole blurb,
Mhm.
right? Because it takes 3 or 4 days to file there. We ask them to wait about a week. Everywhere else, we typically file within 2 to 24 hours. So they can go ahead and call, order their finals, and then we give them directions on where to send it.
So yeah, with water, gas and electric, I know that we like skimmed over that really quickly. I want you to picture your buyer who didn't listen to you a week ago, arriving at the house and the power's off and it's 28 degrees outside and water pipes are going to freeze. 5 minutes of being proactive equals 30 minutes of being reactive at least. That is a nightmare of a situation. So make sure that you're being well ahead of this. Other thing too that might not get caught, really, really important one. What do cash deals have, or what do cash deals not automatically have that lending deals do? Homeowners insurance. If your buyer is buying in cash, if they have a loan, Sean's already on top of it with the insurance company, making sure that the insurance company is in escrow and the money is already being taken care of. Nobody is checking to see if you have homeowners insurance if you buy it with cash. And if something happens to that property, as soon as it files, it's all on that new buyer. So with cash deals, don't forget to tell them, just a quick reminder, if you don't have insurance, now's the time to do it. Do it by email as well. It's not our responsibility. Like it's not in law that we have to be doing this, but that's a massive value to a client. In my opinion, it is our responsibility to make sure that they are thinking of these things because they're getting bombarded with all of these questions from all of these individuals we just talked about. Not to mention having the stress of moving and the repairs that they have coming up and the ideas that they're getting and the emotional stress every day of going, am I still buying this house because we found Carpenter Anthony yesterday? They're dealing with all of that. So they may forget, what's going on. Plus they have job transfers possibly. They could be in the middle of a divorce. They could be having a kid. They could be getting married. There's usually more stressors than just moving that are compounded here.
Can I add a couple?
Absolutely.
Really quick things. So something that's really helpful is when you're writing the contract as the buyer's agent, and we'll love you forever, is put a signing date and a closing date, right? So I know lenders don't, cross country is really good about paying attention to this, but a lot of lenders aren't, but we kind of push lenders too, to be ready for that signing date rather than the closing date. So if they want to move in on Friday, have them sign on Thursday.
We give 2 days on that we have those 3 dates. We have funds and docs. That's the date she's referring to.
Yes.
Our funds and docs date is our first day. I always say closing, I put closing date -2 in our contracts for that. I actually write the date in there, but when we're doing the form, I'm saying closing date -2. Two days is good.
Yeah, I mean, that 2 days would be great.
Yeah.
Usually we're signing buyers the day of, the morning of. We had a 5 a.m. signing earlier this week because they were a doctor and it was the only time they could sign. But I wasn't gonna, they asked me, I'm like, no. But if you, the docs and funds date could be the date before keys and closing. It will make your life easier. It will make your client's life easier. It will make my life easier. So I'm being a little selfish and asking for it, but it would be greatly appreciated. Some of the teams, especially the bigger teams that we work with here at Keller Williams, they sometimes do like 2 full days.
Yeah.
So if they sign on a Wednesday, we're not even gonna go till Friday. But we can close early on that Friday and they can have their keys early if they wish.
It sounds silly, like, oh, you could get keys in the morning versus the afternoon.
Makes a big difference.
What a difference to a buyer after 45 days or 30 days. And this journey started maybe 90 days ago with you. So they're super excited and they're chomping at the bit to get in there. The reason that she's referring to this, by the way, is we're signing 2 different parties. They have to go to 2 different locations typically, and possibly even 4 if they're married and they're not signing together, and possibly out of state. They have to then get all those docs back to the title company and then ship them out to the proper areas. Mainly the county is the one we're worried about. There's other things that they're sending out as well. We don't want them to have to sign it 5 a.m. and 2 p.m., get it back to the office and then courier it down by 3 p.m., which is the deadline that I'm making up a deadline for some counties. You're creating all this stress that if they just sign 2 days earlier, it goes away.
Our cutoff time is 12 o'clock as well. So if they don't sign, if they're not signing pen in hand by 12 o'clock or earlier, it's probably not, they're not gonna get keys that day.
That's noon.
What's that?
That's noon, right?
Noon. Yeah. That's pretty standard across the board with us and anyone else in Northeast Ohio. We'll make exceptions, of course. We always assume that there's 8 children, they're gonna be homeless, it's freezing outside. Like, it's really important to us, they get their keys when they expect to get their keys. And we do our best, but it's not always possible. If they sign after 12, we will do our very best, but we cannot guarantee that it will close and disperse that day.
It's very good. Lastly, that I would say, making sure that all of our forms are filled out, buyer and seller spreadsheet, which is again one of our day 1 actions. Make sure everything's uploaded in Command and you have your commissions done, because guess what you're not getting unless all of that is done? Your commission.
Are you good with me?
I'm all set.
Okay.
Thank you.
Thanks, guys.
Thank you for the keys to the house now.
Oh,
we're
you're
making
welcome.
30 and we're moving on. Now, what I don't want to do is call my client up and say, hey, I forgot to fill out ABC document. It's a silly document that you're gonna say, we really don't need, but we need to have you sign it anyways. I had a coaching client like 2 years ago have a huge problem over a home warranty waiver. There was no home warranty on the house. It was told to the agent or the buyer through an email that there was no home warranty, but the waiver wasn't signed. Our office does not pay the commission until we have that signed. Then that the buyer a week later had a furnace go out. And guess what? There was no warranty and that would have been fine. But now this agent had to go back and say, I'm going to really rub the salt in the wound that you can get a home warranty, not intentionally, but I'm sorry, I have to have you sign this form. And he's like, I never saw this. Why didn't you send this to me? And I had to put out the fire between the client and the buyer. The point being is do all of this proactively. Do this in the first week, right? Do this on day 1, like we talked about, those 6 items that we do immediately. It's going to make your life a lot easier. All it was clicking a button. It would take 30 seconds to sign. Now this client's all upset and blaming their agent that they didn't get a home warranty when it was offered previously. Do this up front, get ahead of the game. And lastly, this should be a celebration time. This is where you can get your closing gifts. Do this ahead of time, get your bottles of champagne. I always tell the story that the first house that I sold, I had to get my mom to buy a bottle of champagne because I was 19 years old. But do whatever you need to ahead of time, drop it off. It doesn't have to be anything crazy, but even stopping over and just showing them that you care, checking in again with them a week later is really good. And then asking for referrals and or reviews is really big. A lot of agents use Zillow for reviews. If you want to have your own, I have one agent who actually just fills out like a they've made like this little hand written one that they just send to their client, put an envelope in, and they'll mail it back to them. You can do that. But yeah, asking for reviews and referrals is really important. You want to create a relationship.
Where do you recommend reviews be provided? Is there something?
Yeah,
you
Zillow,
recommend?
use your Zillow profile. The word of caution to that is if Zillow ever changes your profile, that they'll lock it down unless you have a paid profile. Then you're locked in with those there unless you print them off.
Like Google reviews.
You can do Google reviews, you can do Yelp. It really doesn't matter which one you use. I'm mainly using my reviews for listing appointments. So I show them like, here, go look at them, and then go look at them against other agents. And there are, if you go on Zillow, there are agents who have negative reviews on there. That is a problem. Anyone can post on there, and when you have pages of reviews, of 5-star reviews, I have one review that has 1 4-star review. It's a 5-star, and one category gave me 4, and I'm like, I don't know if it was a button clicked or what it was, but it still bothered me.
Must have been a mistake.
I'm going to claim that, but I'm still searching my mind. Anyways, that's the point, though. We want pages and pages of great reviews. So yeah, find that area and keep pushing it out there. Rarely, though, I wouldn't say that there's one website people are like going to Yelp and like finding the realtor with the most best reviews. This is mainly to show your clients, and if they do Google you, they find this review information. That would be a wise way to go at it. And you can even print these off. I have no problems with people creating their own reviews and or taking them off Zillow and copying exactly what somebody said and putting it on a nice neat sheet of paper as well. That's fine as long as you're copying verbatim what's on there. But yeah, then the follow-up game starts. You just keep calling them. I hope I did a great job. Invite them to your events. Invite them to our clam bake. You can do all of those types of items. So I'm breezing over that. That's probably the most important thing you're getting today is like keep reviewing with these clients, keep in touch with them, keep referring them. Any other questions? I know we covered a lot of information. I would encourage you to go home and like, the best way to study this is like to actually go through this process in your mind. Think of an exact house, think of an exact buyer, and think what are the problems that are about to arise that I can handle right now. Now, that's a hypothetical situation, but you get my point because you're going to be put in this position where you can go back through this flow and back through and understand where the challenges could come up. And think of it from the buyer and seller perspective. How are they feeling at these moments? If we are doing our job right, we should never have a buyer go, what do we do next? Or a seller say, what's going on next? We want to tell them 2 to 3 steps ahead. You're going to be hearing from the lender. You're going to be hearing from the title company. Keep in communication with the title company. Watch your emails from the title company. They'll say, we're signing at 4 o'clock tomorrow. Be aware that that's coming up. Your job is not done once your purchase agreement is signed. It's just getting started. All right. Well, that's everything we've got. I hope this was helpful for everyone. Thank you for coming and sharing your information, Sean and Don, and all the other affiliates. And we'll be having another one coming up in Rocky River here in the future. So if you want to do this again, you're more than welcome to. Do we have any other events coming up? Next week, Wednesday, 10 to noon, we have at the Independence. Does anybody remember where that one is? I know it's in Independence.
Civic Center.
Civic Center then. So Independence Civic Center, 10 to noon. We have our Q2 update. I would recommend that you go to it. And we have group coaching every Wednesday, 11 and 5:30. And obviously our team meeting is at 9:30 on Tuesdays. That's it. Thank you, everyone. And if anyone is online, I am checking here. I apologize, I was not checking the chat. I'll go through these questions real quick. Sherry, on the east side, you're going to refer Sean Hadley. On the west side, you're going to refer Don Jaracki. If the closing date and possession date are different, how does the billing and sewer for water and sewer get dispersed or reimbursed? They go by possession date, not transfer date. And Sandra, for clients that have sellers keeping possession after close, when is the walkthrough scheduled for? That's a great question. Do the walkthrough prior to closing. You have no recourse to that seller or very little recourse afterwards. Sherry, I'll type in Sean's phone number here shortly. But the point being is if you close on the house and then you have possession 2 weeks later, and you just go, sorry, Mr. Buyer, you got a house with a hole in the wall because the seller busted up a house when they moved in, there's going to be no recourse for that. You can ask for it, but the recourse you have prior to close is there's damage done. We're not closing until. Now, how can you hold them accountable while they're in that house? You can ask for a security deposit like a tenant would. So I would say, hey, Mr. Seller, you're not getting $2,000, and you write that up. You can reach out to me and I can help you with that, but it would just be you're holding $2,000 or $3,000 until the seller completely moves out, and then once that happens, they'll money back. So, great question. Sherry, I am typing in Sean's number, and we are all good. Sorry for not checking the chats. I should have been on that earlier. That doesn't need to be written in the contract initially. You could add it after. It should be in the contract initially, but I think if you ask, I think it's a reasonable request to ask from the seller afterwards. Oh, spelled John's first name wrong. All right. Very good. Well, thank you, everyone. Make it a great one, and we'll talk to everyone soon.